Capital Wealth Council is an authorized financial service provider. For all your financial needs, please contact us at www.capitalwealthcouncil.co.za.
Good morning, everyone, and welcome to Quid Pro Quo. Quid Pro Quo, this for that. This channel being our first episode, I think it's fitting for me to give a brief description of what this channel is about. Our main focus essentially me working in the finance and insurance industry. I'm sure, you know, like the word of the channel would describe, quid pro quo, this for that. We all pay insurance premiums, so the insurer can always give us something back in return or put us back in the same position we were on, and that's what motivated the name, this for that. If you're going to set up an investment account and put money aside, you obviously expect a good return out of your investment, this for that, quid pro quo. But essentially the main focus of this channel and the videos that we'll be sharing with your audience is to ideally provide financial education. And you will notice that from the content of the show, mainly our topic and discussions will be mostly focused on info tips around investments, general insurance, succession planning, asset protection, and wealth creation, and so to speak. And we hope that these topics will help you manage your monies, your investment correctly, and also stay within the terms of your insurance contracts and help you grow, preserve the wealth, and pass it on to the next generation. But as well of introduction, my name is Edward Banda. I'm the host of the show. And obviously from a background point of view, I've got over 18 years in financial services industry, a member of the Financial Planning Institute, what we call a certified financial planner. And ideally from my past experience through work and life, I hope to, you know, empower, educate, and also clarify certain gray areas that you may be faced with as you try to grow your wealth and improve your financial position. And also, before I forget, I just want to say a big thank you to our sponsors, Capital Wealth Council, who've made this show possible by way of support and providing equipment and information that we need to deliver the messages across. And I think it's only fitting because this is the month of June is ideally a youth month. We recently celebrated Youth Day on the 16th of June here in South Africa. And I feel it's fitting to ideally, you know, start with a topic that addresses certain aspects that the youth should be aware of. And for me, I think one of those important topics as a youth, growing up, I was not fortunate enough to have had access to a lot of financial information, and we tend to start on the back foot if we're not well educated and have sufficient information on how to manage money from a younger age. Therefore, in today's topic, we will be focusing more around savings and investments, just on the surface level, just to give our youth a little bit of information. Even for the elders, I think they will certainly benefit out of this because it's never too late to actually start saving and investing or creating wealth. And I believe, I mean, youth literacy, investment and financial literacy should be actually added into the curriculum so that the youth have access to this data upfront before they actually start earning their first paychecks. And then I think by developing a savings, I mean, so to speak, a savings culture and investments is pretty underdeveloped in South Africa, or actually in most underdeveloped economies. And we believe that by developing a savings habit, one is likely to achieve future goals and objectives, simply because not everyone is fortunate enough to access capital if you're looking to start a business or funding, or, you know, it's always a very, very difficult journey, and sometimes you want to have options to actually self-fund yourself by putting money aside for a future goal and aspiration or objective that you wish to achieve. It might be traveling. For some of us that love traveling, you might just want to buy a first house or first new car, which requires a deposit, or that requires a little bit of a sacrifice by putting money aside over a significant period of time. Essentially, you know, the basics of investments, I think it's pretty simplified. The markets have done quite well to provide various and different investment vehicles where one can save. For me, I think the most common investment types, mainly that you'd find is usually short-term investments, medium-term, and long-term investments. And all these type of investments are ideally governed by time. Time meaning how much time do you have to invest before you can actually access your money. So for example, if you're looking for a short-term investment plan and you only have between maybe 0 or the first month to a couple of years, say up to 3 years, ideally it will mean you'll be investing in maybe a unit trust, and the time that you're investing for would probably determine the risk that you're going to take through your investment profile. So that, you know, because ideally how that works is that the longer you invested for, say you're investing for 5 years and longer, it means you can afford to take a little bit of risk and deal with the market volatilities that come with it over time. And if you're investing for more than 10, 15, or 20 years, which will be typically more of a long-term investment, you can even take further risk as well, depending on your age. And the younger you are, the more risk averse you likely, the older you are, the more risk averse you would be, meaning you taking a step back on being more aggressive, which could lead to you losing a portion of your capital. But ideally, from an investment point of view, you need to get to a point where you're going to separate your goals between short term, 0 to 3 years, medium term, maybe 5 years and longer, and maybe longer term investment, which could be 10, 15, or even 20 years and longer, depending on your age. And then by splitting your objectives and goals in this manner, it will then give direction to the type of risk you're willing to take based on how long you want to access the money. And I mean, if you're wishing to just simply raise capital for a specific goal, the time will then govern how we invest your money. But from a risk point of view, you could be conservative, meaning the low risk you put into your portfolio, the lower the returns. And I equally saw if you will be accessing your money in a short period of time, you probably would be taking a lower risk to prevent the risk of actually losing your capital when you need your money the most. And typically, if you're investing for 5 years or longer, you could then go into a slightly aggressive risk portfolio where you invested in local and foreign equities and the like. I will share a little video on a few projections on how you could put small little funds and monies aside to try and get and just show you how much money you're likely to make over the term. I think the key factor is we all need to. In this example, this projection report just gives you an idea that if you invest for a minimum term of 3 years and your investment portfolio gives you an 8% return or interest, and paying your investment contribution monthly, and every 12 months you add a 10% increase to the initial contribution. The scenarios are below here. Will show you that in scenario number 1, 300 Rand with 8% interest will give you a future value of 13,000. 500 Rand, 22,700, 31,200, and 1,000 Rand, about 44,000. So ideally, to get to 100,000 Rand over a 3-year period, you will probably have to double scenario number 4. I'll just show you another scenario where we looking at a slightly longer term investments, where we were pushing to raise a little bit of capital for a minimum term of 5 years. In this example, I've just changed the numbers and the investment term to 5 years, same amount of interest, 8%, saving monthly with a 10% annual contribution increase. And you can see by just increasing the investment term by 2 years, our return or future value has actually doubled from the initial 13,000 to 26. And on 1,000 Rand, we just about 12,000 short of getting to 100,000, and the 2,000 Rand contribution gets you around 176. So ideally, like I said in the video, time is money, and any investment portfolio you set up, the longer you stay invested for, the higher the future value. And depending on your objectives, again, you can then plan around how much you want to see at the end of the investment term, determine a contribution that you can afford to last the term with the correct risk profile that matches your objective. You should be able to start creating wealth slowly. And let's just look at one last long-term scenario shortly. In this projection, I've slightly increased the investment term to 15 years. So if you're still in school, or you're a young person looking to buy your first property in the first 10-15 years, or you've got a specific goal, you're looking to get married, travel the world, or start a business, this scenario, depending on how much money you have to put away, or if you're even doing it for your little child who will be turning 20 in 15 years time, you can see 300 Rand saved on a monthly basis with a consistent 8% return will give you 188,000. 500 Rand, 314 future value, 1,000 Rand, 628, and if you put away 2,000 Rand a month for 15 years, you can gift yourself or your loved ones, your child, or anybody that needs the money, 1.2 million Rand over a 15-year period. So essentially, the longer you stay invested, the more capital you can raise over that period. And this goes to show that by paying and rewarding yourself, the reward that you receive at the end of the term is substantial. And then, of course, by talking to a qualified financial planner, you can then get more guidance on how you can improve the return on your investment by investing in different portfolios that are in line with the investment term and your objectives. Thank you for watching, and remember to subscribe so you can get more notification when we upload the next video. I think the key factor is we all need to develop a habit of saving, no matter how little the money we have. And you'll be shocked that actually setting up money aside as little as 100 Rand, 200 or 300 Rand a month over a long period of time would actually yield significant results. I'm sure many of you may have or are aware of Warren Buffett and how his journey started. I mean, he's one of the world's wealthiest men, and the common stories you read about Warren Buffett. He used to sell newspapers as a kid during school holidays and use those monies to actually buy stocks in different companies. And over the long term, he's built a significant portfolio of money and the like. I hope you've been inspired. We'll try and keep it short and simple. I hope you've been inspired. Be sure to like, subscribe, and follow so you can be the first to know when we upload the first video. I'll see you in the next video, and thank you for watching. Goodbye.